Hi, this is Mike Larson from Money and Markets TV. Investors all over the world were really looking forward to this week. They expected the Federal Reserve, the Bank of England, and the European Central Bank to offer new monetary policies to pull the global economy out of its slump. But all they got was disappointment. First up was the Fed. Officials there said that economic activity has decelerated somewhat, the housing sector remains depressed, and growth in employment has been slow. But despite all that, Ben Bernanke and company basically punted. They decided not to do any of the things that Bernanke told Congress last month that he could do, cutting the interest rate paid on excess reserves, extending the low-rate pledge from 2014 to some further out period of time, or launching another round of quantitative easing, or QE. But I think policymakers know that no matter what they do, it won't have much of an impact on the markets or the real economy. So they're just kind of dangling that QE carrot out there for as long as they can. Eventually, I think they will have to do something beyond Operation Twist and keeping the federal funds rate pegged at historically low levels. But when the Fed does finally introduce QE3, I think that announcement will be aggressively sold now that investors know there's no oomph behind these kinds of moves anymore. And then there's the ECB. If anything, its meeting was an even bigger disappointment than the Fed's. First, ECB President Mario Draghi said he'll do whatever it takes to preserve the euro. But apparently, that just means saying that the central bank may buy bonds down the road, and that indebted countries like Italy and Spain are better off going to other bailout programs to get their dough. The only problem is the current EFSF program is running out of cash, and the ESM bailout program that's supposed to replace it hasn't even been put into place officially yet. Now, the global markets reacted to this inaction with a sharp sell-off, sending the euro currency to within a whisker of multi-year lows. And I think that's only the beginning of the market wipeout that may be coming. Because even if the Fed, the ECB, and the Bank of England realize they screwed up, and they launch new QE programs or buy more government bonds, it won't matter. After all, the Fed has already done QE1 and QE2, not to mention Operation Twist 1 and 2. The ECB has already bought bonds issued by troubled sovereign countries, and the BOE has already agreed to purchase hundreds of billions of pounds of UK bonds. And none of that monetary garbage has worked. The UK has still sunk into a double-dip recession, 6 European countries have done the same, and the US economy has slowed sharply. So if investors are counting on central bankers to bail them out, guess what? These guys don't have any bazookas left. All they have are pea shooters. I'm Mike Larson for Money and Markets TV. Thanks for watching.